MercadoLibre, one of my top holdings in my portfolio, top class management, top class execution, reported their latest earnings report. Stock is down between 7 to 10% depending on when you're watching this video. What exactly happened? To me, this was an extremely strong quarter yet again, with some little hits and miss here and there. My opinion, nothing to be afraid of. If the dip is big enough, I will certainly be adding more to my position. Currently, MercadoLibre, yes, one share will cost you quite a lot, $1,675, has a market cap of $90 billion. Overall, when you look at the metrics, yes, compared to its 10-year mean, it is much cheaper. Of course, you might say 56.8 times forward PE, not the cheapest out there, fine, but this is a company that is still expected to grow quite fast, and it is the dominant player in their market. Now I want to start off with the biggest reasons for the hits, and that's basically the one-off expenses. So the one-off expenses will not have a material cash impact, as most of the values in question were accumulated in judicial accounts and booked as non-current assets during the corresponding periods, as disclosed in previous Form 10-Ks. The first one is a $320 million related to ongoing legal proceedings. Their legal advisor's view is that risk of losing the case is now probable. We booked $58 million of the provision in cost of revenue and $261 million in product development expenses. The total operating expense related to this one-off and incurred in 2023 was approximately $70 million. The second one-off expense of $31 million booked in cost of revenue related to a recent ruling from Brazil's High Court that the default sales tax must be paid for the period April to December 2022, while the legality of the tax was being questioned. So that has impacted, let's say, the headline numbers. But without that, a double beat. Now before continuing here, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now I do want to start off with a section of their business that is really not talked about at all, and that's the advertising side of things. They say here that they've welcomed almost 50,000 new advertisers to their ad platform in 2023, which they believe is an indication of its importance to sellers and the strength of the product. This is particularly the case among the small and medium-sized sellers that make up the majority of their marketplace and use their advertising platform on a self-service basis. Advertising continues to make an important contribution to our e-commerce service revenue, with consistent growth that remained above 70% on an FX-neutral basis for the 7th successive quarter in Q4 2023. As GMV grew at an even faster pace, 79% year-over-year, ads penetration was slightly lower quarter-over-quarter at 1.6% of GMV. On an annual basis, penetration rose to 1.6% of $45 billion in fiscal year 2023 from 1.3% in fiscal year 2022. And as we all know by now, advertising, very, very high margin business. Now, continuing here looking at the marketplace highlights. Momentum remains strong with items sold growth accelerating yet again. They say here that growth in Brazil continues to be broad-based, with most categories making a strong contribution to overall FX-neutral GMV growth of 35%. With regards to items sold, MercadoLibre sold an additional 92 million items year over year in Q4, accelerating significantly versus the additional 73 million items sold in Q3 2023 and 50 million in Q2 2023. Of course, Q4 usually a strong quarter. With regards to unique buyers, that grew by 18%, all segments continue to show healthy trends, with Mexico posting the highest growth. With regards to the logistics part of things, fulfillment reached a new record of almost 50% of shipment, growing in all categories. They say here MercadoLibre shipped 407 million items in Q4, growing at 31% year over year, the highest level of growth since Q3 2021. Fulfillment by Meli grew once again and reached record level of almost 50% of shipment. All markets with fulfillment operations posted higher penetration year over year, with Brazil showing the most progress, up 10 percentage points year over year. As for the fintech segment, Mercado Pago growth accelerated sequentially on a widespread basis, so everything here goes to the right and on the way up. They say here that unique fintech users hit a record of 53 million, with all three top geographies contributing strongly to the 4.3 million quarter-over-quarter increase. As for the credit side, Mercado Credito net interest margin after losses, or NIMAL, has expanded quarter over quarter, which is good. Then with regards to the NPL side of things, there are two sides here to the story. One a positive one, the other one a slightly negative one. So they say here that their 15 to 90-day NPL edge slightly higher quarter on quarter, driven by product mix, specifically credit cards Brazil. Overall, in line with seasonality, Q4 showed improved roll rate. Then with regards to over 90 NPL, that continues to decrease, extending the cleansing of cohorts that commenced in 2022. So far, so good. Now let's jump into the margins. That's where basically things got a bit worse. But of course, there was an explanation for that. So let's start here with income from operation and margin. Income from operation reached $240 million or $572 million, excluding one-off expenses. They say here, excluding one-off expenses, income from operation would have grown 78% year over year, with a margin gain of 270 basis points, with all four expense lines showing cost dilution. As for the commerce take rate, they say our commerce revenue growth remains strong despite the tailwind from shipping fees in previous 2023 quarters becoming a headwind. Commerce take rate went from 17.3% to 18.3%, up year over year, but down a bit quarter over quarter. Why is that here? They say shipping fees. As for the financial side, revenue growth remains strong despite some pressure on monetization, which you can see here. Last year, same quarter, take rate was 3.73%. We're now at 3.18%. That's even lower than last quarter, 3.45%. But as you can see here, the biggest hits come from credit revenue and net financing fees. Of course, this is something to keep an eye on. If this continues to go down, questions will be asked, but I'm fully comfortable trusting management. As for gross profit margin, here yet again, we take a hit, down 269 basis points year over year. Gross margin was negatively impacted by 2.1 percentage points of one-off expenses. The same will be said here about income from operation margin, down 600 basis points, impacted by one-off expenses, equivalent to 8.2 percentage points of revenue. And lastly here, net income margin, we've talked about that before, takes a hit. Excluding one-off expenses, net income margin would have been 9%. And so last thing here, cash flow from operations that reached $1.92 billion, showing another quarter of strong cash generation. And now if you're looking for a slide with regards to outlook or guidance, they don't give guidance, so we'll just have to go quarter by quarter. But again, very, very strong quarter. They have a proven track record of executing quite well. So yes, one small hit here because of one-off expenses, nothing to worry about. Of course, I'll keep my eye on those take rates. If that continues to get worse over time, then maybe I'll ask more questions. But overall, right now, we're sitting at just over the 50-day moving average at $1,671. The 200-day moving average sits at around $1,427.30, something like that. If we reach that, I'll be adding to that dip around those prices. Yes, it is true that before they reported earnings, RSI was very, very close to being overbought. Okay, a small little correction here of 7 to 10% or so. Always nice. I'll be looking for a further dip if that happens when the market opens. It is a top 5 position for me, so I'm patient. I'll be looking for even more red, let's say, in the market to be adding significantly to my position. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.